Hi everyone, welcome back to my channel. So today's video is all about ETFs. So I'll start by just explaining what an ETF is. I'll provide details on some lesser known ones to look out for. And of course, I'll end it with information on some of the more popular ones as well. So let's just go ahead and jump right into it. I definitely want to start with the iShares ETFs, which are going to be by BlackRock. And y'all can see here, I have the ticker symbol IVV pulled up. So just to provide a very simplistic definition of ETFs for anyone who may be unaware, ETFs are exchange-traded funds, and specifically, these are investment funds that trade on stock exchanges like individual stocks would. So essentially what that means is that they're a collection of stocks that are built to track the performance of a specific index. It can be like a sector, commodity, or even a group of assets. And what this does is gives investors broad exposure without needing to buy each stock directly because they're combined in one unit, hence being a fund. Now, arguably, the most important benefit of ETFs is the diversification with real-time trading flexibility, because ETFs are often used for both long-term portfolio building and short-term trading strategies. Now, as mentioned, I want to start off with iShares, and this is going to be the core ETF. And this is by BlackRock. You may or may not have heard of that institution before. However, IVV is one of the biggest iShares as a core S&P ETF fund, which you can see here. Now, the volatility is fairly high. So it's a go-to choice for U.S. large cap equity exposures since it tracks the S&P 500 index, which means it holds large cap U.S. companies across all major industries. So let me go ahead and pull it up on the 5 years so y'all can see how it's performed. Click on this. Now, investors like this for the obvious reasons because it's one of the biggest and most liquid ETFs in the world with a very low expense ratio. And if we take a look at the growth over the last 5 years, we can see that the trajectory is obviously uptrending with some slight dips here and there. Now, back in the year 2020, we can see that the low of the ETF was trading at $323.72. And then by the end of 2021, we can see that the share price was actually trading for around $476, so in that 480 range. We saw some highs and lows in the year 2022. And then in 2023, we saw this rally to the upside with a slight dip right before Q4. And then it ended that year on a high note, trading back at that range of about 480. So y'all, this just brings up the point real quick that I've mentioned it so many times that the stock market is a cycle. It definitely repeats itself over and over again. So we can see clearly here in the year 2021, this ETF was trading in that range of 480. And then fast forwarding to 2023, the end of the year was also again trading in that same range of $480. And then now when we take a look at last year in 2024, we can see that the ETF had a significant amount of growth. And we can see it reached an all-time high of about $610. And now when we fast forward to this year, we can see that there was a slight sell-off in the springtime. However, the bounce back was pretty quick because we see the ETF recovered. And towards the end of the summer, we can see this rally to the top, hence displaying this in a continued uptrend. So yeah, that's just a quick overview of IVV. I do want to go ahead and pull up another BlackRock ETF, which is actually going to be AGG. So I'm going to put that in here. All right, so AGG is primarily seen as a go-to for fixed income, as it's one of the biggest bond ETFs. So this is the iShares Core US Aggregate ETF, and you can see that reflected here in the title. So this is a standout. Now, it does cover a broad range of investment-grade bonds in the US, including treasuries, even corporate bonds, I will say that. And also you'll see some in mortgage-backed securities as well. Now, the benefit in this ETF is that many investors use it to balance their portfolio and add stability alongside stocks, and this is simply because it's spread across US fixed income securities. So the best way to think about this is useful for diversifying in a different element of stability. Now, clearly we can see the performance over the last 5 years hasn't been perfect, and we can see the start of the decline pretty much took place in the beginning of 2022, where there was this massive sell-off. It continued into the year 2023, reaching the 5-year low of $91.58. There was a slight climb at the end of the year to get it up to about the $100 range, but then in the following year, in 2024, we saw some inconsistencies, a bit of consolidation, also another slight sell-off, and then we saw another rally to the top towards the end, and then of course ending it off in Q4 with another sell-off. Now, when we take a look at this year in 2025, we can see a little bit of stagnation. It's kind of consolidating and trading within this range from $96 to about $100. Now, some may see this as an advantage because the ETF price has declined. This may be a good opportunity to go ahead and buy shares. Others may see this as a clear sign that they want to stay away from investing in this ETF. So it really just depends on the perspective. I will say that the ultimate high for the last 5 years was at $118. So we're only $18 away from that share price. So it's completely perspective on how you view it. I will say that bond ETFs are something you should definitely look into, just because the return on investment is a little bit different than what you would see on a standard stock ETF. All right, so another iShares ETF that I want to mention is going to be ITOT. So I'm going to type that in here, and we're going to go ahead and take a look. Now, this ETF does also fall under BlackRock as well, but you can see that this is the total U.S. stock market. So it is a core ETF that gives investors access to the entire U.S. stock market, not just the S&P 500. And what this means is that it includes small and mid-cap stocks in addition to the large caps. So it's a good option for a wider range of diversification within the U.S. equities, since it captures also the smaller stocks as well. So within the past 5 years, we can see that the low was at $73.15 in the year 2020. And currently within the year 2025, we can see that it has reached its ultimate high of $146.26. And at the time of filming this video, it is still currently trading within this range. So if you haven't looked into this specific ETF, I definitely recommend doing so. That way you open up your portfolio to the option of small, mid, and large cap stocks. So this is one that I personally think is worth looking into. All right, so let's go ahead and move on to some Vanguard ETFs. Let me pull up VTI. That'll be the first one. So real quick, for anyone unaware of Vanguard ETFs, now Vanguard is well known for its low expense ratios. And these low costs mean more of an investor's return is kept rather than paid out in fees. And let me also say that Vanguard offers a variety of different options. They provide a diverse range of ETFs to fit different investment goals. So that's what makes them stand out the most in my opinion, because their ETFs include funds for US and international stocks, bonds, and specific market sectors. They even go as far as having ESG, which we know of course is the environmental, social, and governance investing. So essentially the possibilities are endless with Vanguard. Now going over the highs and lows, we can see back in 2020, kind of following with the same pattern. We know what was going on in the world at that time. So the low was at $165.02. But since then, we have seen a progressive climb, with the ultimate rally being this year, as the stock has reached its all-time high for the past 5 years, trading at $330.36, and currently is still trading within that range. Now, what also stands out about this specific ETF is the accessibility. One, you don't need a large sum of money to start, since it is trading under $400. Also, another thing to mention is the liquidity. Vanguard has more than $2 trillion in ETF assets under management, meaning many of its funds are widely held and highly liquid. Now, specifically when we look at VTI, it also has a really high level of tradability. This ETF is a segmented choice across thousands of securities in a single investment. And to be all the way real, y'all, this fund is even more diversified than VOO, tracking the total US stock market, including large, mid, and small cap stocks, in a similar capacity to ITOT with BlackRock. So not that the two are equivalent, but they do function in the same manner. All right, so another good option for Vanguard is going to be VUG. Let me pull that up real quick. Now, this ETF invests in US large cap growth stocks. Their focus is mainly on companies with higher than average earnings and sales growth. And you'll notice that here in the title. The share price is currently at $477.43. And that's also a reflection of the range within the last 5 years at the all-time high of $484.21. And we can see back in the year 2022, it was at its all-time low of $203.64. So pretty significant growth within the last 2 years. The trajectory has definitely been to the upside. Now, to tie this together, one of the best recommendations for this specific ETF is that if you're going to focus on growth stocks, this ETF may be more suitable for you, because clearly this rise to the top was not something that we can count as insignificant. Okay, so another Vanguard ETF that I want to discuss is VGT. You may or may not have heard of this one. It is a little more pricey, I will say that. And the reason being is that this fund offers concentrated exposure to the US tech sector, and you'll see that reflected here. It's information technology. Of course, it's including software, semiconductors, AI, and companies that fall under those industries. Now, with this ETF being a bit more pricey, you will have to be a little bit more strategic within your investment with this one. We can see the 5-year all-time low was in the year 2022 at $291.62, but currently is trading for $742.49, which is nearly in the range of the all-time high of $753.59. So again, when we discuss growth potential, we clearly see that this ETF is on the rise. Now, would I specifically say invest in it now? You may want to wait for it to dip and have a sell-off from anywhere from like 20 to 40% of the all-time high and then decide to invest in it, if that's your specific strategy on how you trade. Okay, so the last Vanguard ETF that I want to mention is going to be VYM, and I'm sure you've all heard of this one. Now, this Vanguard ETF is going to provide a high dividend yield, simply because it invests in companies that provide a high dividend payout. Now, what that translates into is providing a source of regular income for investors. So if you know you're the type that likes to have those monthly or quarterly payouts, this ETF may be perfect for you. Now, following the same path of the ETFs that I've mentioned before, we can see that it's on the uprise. A little bit of stagnation in the years 2022 and 2023, but since then it has bounced back. And in 2024, we saw this as a clear rally with only a slight dip in Q4. And then this year in 2025, we saw a total recovery from this April pullback. And this ETF is currently trading for $140, hence also being in the range of the all-time high for the last 5 years at $142.17. So definitely not bad at all. Certainly one to also look into and just do your research based upon what you feel is best for building your portfolio. Now, real quick, another thing that I did want to mention for those who may be unaware is the glide path strategy target. And these are going to be date funds that employ glide paths. So you may or may not have heard of that. Now, in a future video, I will discuss some of the ones that I think are super important to at least keep on your radar. But for this video, I just wanted to mention it because these are planned progressions of asset allocation changes, and it's a mix of equity and fixed income investments. So alongside those specific points in time, a fund's glide path generally shows how its asset allocation will shift. And basically all that means is that it's going from a more aggressive to a more conservative investment approach. And that's based upon the move toward and beyond the target date that you set. Now, with that being said, you may be asking yourself, what are target date funds? Now, target date funds are commonly known as life cycle funds, and this can be for like retirement or any like age-based fund. And for the most part, they're managed based on a specific target date, and this assumes an estimated age of the account. Now, investors can consider factors such as their risk tolerance, personal circumstances, even if you have like your complete financial situation before you choose to invest in a target date fund. If you already have that mapped out, it may be worth looking into it on a deeper level because these funds are generally designed for investors who expect to invest in a fund until they retire. And then what happens is you gradually make systematic withdrawals afterward. Now, let me also say there is no guarantee that an investment in a target date fund will provide adequate retirement income. And investors can lose money at any stage of the investment, even near or after the target date. But it's always better to be safe than sorry, because we know with any investment there comes risk. But yeah, I don't want to get too deep in it in this video. I'll talk about it in a future one. Alright, so I do want to mention a couple specialty and sector ETFs. First one being XLK. Now, I'm sure most investors have already heard of this. This is going to be the technology sector ETF that invests in the technology sector of the S&P 500, with of course major holdings like Apple and Microsoft. So if you've been trading for a while, then you're likely familiar with this ETF. And kind of following the same trend as the others I've mentioned, we can see it's trading within its all-time high. Currently, the share price is $280.49, within that same range of the $280-$289. And staying within that same realm, XLF is also another select investment. But this one focuses on the financial aspect within the S&P 500, including banks and insurance companies. Now, this ETF, in my opinion, is very affordable. The share price is currently $53.55, and y'all can pretty much see across the board that it's following the same pattern of all the others that I've mentioned for the most part. Currently in an uptrend, and it's in that range of its all-time high. So no need to provide a whole lot of detail on this one. If you just haven't looked into it, definitely one that you want to keep on the list. Alright, so the next one that I want to discuss is going to be QQQ. Now, this one I have traded quite a bit, and y'all can see this is very jumbled up with these price levels, but just feel free to ignore that for right now. I won't do a whole lot of discussing on QQQ. Again, this is probably one of the most common ones. Of course, it's Invesco, so it's tracking the NASDAQ. But I do want to talk about the near equivalent of this ETF, which is actually going to be QQQM. So I'm going to go ahead and put that in here and pull it up. Now, of course, QQQM is the Invesco NASDAQ 100 ETF. And it's certainly a lower cost version of QQQ. Now, it does mirror the performance in the same capacity, and it holds the largest non-financial companies listed on the NASDAQ exchange. So names again like Apple, Microsoft, Nvidia, and this just gives investors a concentrated exposure to tech and growth-driven sectors. Now clearly I've marked this chart up quite a bit as well, but just to give a key difference from QQQ is that QQQM offers a lower expense ratio. QQQM is approximately 0.15% versus QQQ at a 0.2%. So it makes it slightly more attractive because it's a bit more cost efficient for long-term investors, while QQQ is typically preferred by traders for its higher liquidity and options availability. So it's often used as a growth-focused investment fund. So honestly, you really can't go wrong with either one. QQQM is just a smaller version of it. Okay, so next up is SPY. Of course, this is the S&P 500 ETF Trust, and it's one of the oldest and most traded ETFs in the world. Now, we already know that it tracks the S&P 500 index, giving investors exposure to the top 500 of the largest US companies across all sectors. Now, because of its high liquidity and broad market coverage, SPY is widely used for both long-term investing and short-term trading strategies as well. So you often see people trade SPY options, myself included. And again, I have marked this entirely up with all these different price levels, so just again, ignore that. But clearly we can see that SPY is within the range of its all-time high of $667. So some may steer clear of investing in it if you're brand new, so you may want to wait for it to dip and pull back. But it's completely your choice on how you choose to do that. So a good tip if you are trading it with options is to make sure that you're analyzing SPY on various time frames. Okay, so the last thing I want to cover in this video is just how to choose an ETF and what components make for a good investment in a fund. So to determine which ETF is right for you, consider a few factors. One being your investment goals. You definitely want to decide the range of your market exposure, your income generation, or targeted growth in a specific sector. Then make sure you take a look at the expense ratio, and that's basically the annual fee charged by the fund. For similar ETFs, a lower expense ratio means more of your returns stay in your pocket, so that's always a benefit. Also, make sure you're looking at liquidity and the fund size. So funds with high trading volume and large assets under management, the AUM, they tend to have tighter bid-ask spreads, making them easier to buy and sell. In addition to that, make sure you check the holdings to ensure it provides the level of diversification that you actually want. Because a single fund may hold a collection of companies, but some ETFs hold highly correlated assets and are less diversified. And then lastly, make sure you always pay attention to your risk tolerance. Because one of the main things to understand is the risk level of the underlying investment. For example, a technology-focused ETF may be more volatile than a bond ETF. And y'all could clearly see that based upon the examples that I showed of the ebbs and flows of the price ranges. So yeah, y'all, that's all I really wanted to discuss. Just wanted to provide some information about ETFs for anyone who may be brand new to trading. And with that, that'll pretty much do it for this video. I hope you found this information to be helpful. If so, y'all already know what to do. Feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.